Good afternoon, this is Brad Dennis with BIS Commodities with your weekly market wrap-up. This is wrap-up for June 2nd. As far as corn is concerned, still range-bound in your corn market, 360 to 380. On Monday, we saw lower good to excellent. Everybody was looking for a 67 to 69 range on good to excellence. Came in at 65. We saw the market rally. There's enough old crop corn out there that stopped the rally as some let go of actual product. That has kept us in the range. Now today we're a little bit firmer. People anticipating that on Monday that good to excellent rating is going up. And that's really what you want to see. You want to see the direction of the good to excellent rating. Earlier in the week, we had a cold, wet forecast. Right now, it's about 84 degrees outside and sunny. So that weather forecast did not come true. It's ideal right now. A little bit of heat helping that corn grow. Next Friday, we do have a supply and demand report. So on Monday, we see the good to excellent ratings go up some. We might see corn back off. That's probably the time that you want to look at maybe going into the supply and demand report from the long side, just in case there are any surprises. I doubt that there will, but with the good to excellent still probably being under the 5-year average, it could happen. Over in the beans, that's a technical trade. Once we broke 940, beans just kept falling off. When you look at beans, you know that the demand side is made up of crush and sales. Well, crush came out a little bit better this week than people had anticipated. Export sales reported were better than expected, and we did see a daily announcement of bean sales. So I would think that we're going to have a slight bounce off of this lower price in beans. The whole reason that people fundamentally were talking about beans going down was because of cancellations. Well, those cancellations were for Brazilian beans, not the U.S. beans. So our market was more of a technical sell-off. It's bouncing back up. You can see that with the spreads a little bit, old crop, new crop. And I would imagine that we go back up and test that 940 area. I don't think you really beat up this bean market until you start seeing U.S. cancellations. And like I said, we had an announcement of beans sold to Spain this morning. So granted, it was a very small number, but we're still making sales. People aren't switching to South America. Yes, they've got a huge crop, but if nobody's buying it from them, we're going to deplete ours first. So anyways, that's what we're looking at in the beans. Stock market, non-farm payrolls came out today. They were less than expected, yet we continue to move to the upside. Realistically, there's no other investment with interest rates so low. You've got to turn to the stock market for any type of return, and we're still seeing that. Now, a couple things that will affect that, though, down the road. You look at the S&P, it's about 130% of GDP. That's well over GDP, and that's getting a little bit toppy. We have 2 weeks away from an FOMC meeting on June 14th. Everybody anticipates a June rate hike. Typically, before those June 14th meetings, we have a backup in the stock market so that they don't raise rates. We'll see what happens here. Crude oil. Crude oil's down to its lower levels. Went up to about 53, 54. Now we're back down to 46, 47, 45, 55 range. One of the main reasons is, OPEC, yes, they're cutting production and they extended that for a certain amount of months. But Nigeria, Libya, those two countries that don't have their output controlled are pumping as much as they can. The U.S. is pumping as much as it can. So we're still seeing a lot of oil come out here. Now, our inventories have been down for the past, I want to say, 5 weeks in a row now, and gasoline demand is up there. So with that dynamic in the energy department, I would imagine we're still going to be 46, 45 on the downside, 55 on the upside until something else happens out there. Cattle market. Cattle market screaming higher. Everybody came into this week thinking we'd see steady cattle. The Fed Cattle Exchange came on Wednesday. We saw 132s trade there. Everybody was thinking, all right, we're going to be steady to lower for the rest of the week. Well, then packers came out and they were given 136, 137, and just went up from there. You have to think that a lot of this is due to India's ban on beef exports that came out this week. We've seen the load count in the afternoon be well over 100, 150 the other day, which is dramatically higher than what we are used to seeing. They're still pulling cattle forward, so that's positive for cattle prices down the road. Today we said, like I said, we saw Thursday, 137s. Today we heard of 220 in the meats in the north. So you've still got a bullish play on this unless boxes break to the downside or we start to see that load count diminish, and we're not seeing it right now. Looking forward, you're looking at Monday crop ratings coming out for corn. Beans should be fairly far along in planting with this good weather, so that's not going to be anything that's going to help prices. That should be negative prices. And then on Friday, we're going to see supply and demand reports. And it seems to me if you do get something that's going to be bullish for corn, you're going to have it bearish for beans. So I think that's how the trade will be setting up for that report. So that is the wrap up for this week. If you have any questions, give us a call here at BIS Commodities, 1-800-373-2525, or look us up on our website at www.biscommodities.com. End of broadcast.